Tom, I want to go to you. You've been patiently waiting here.
Yeah.
You're talking, as a value-focused investor versus growth, maybe versus some of the AI names. You had some sectors you were looking at earlier and some names. So what would you add to this discussion?
Yeah, I think we're in a very bifurcated market. You have the concentrated stocks, which I think you run the larger risk. Okay, I definitely agree that we're in the roaring 2020s and the story is just getting started. But outside of that, you could basically throw a dart at a board, to Scott Martin's point, and find a tremendous amount of opportunities to put money to work at reasonable valuations. And a theme at our firm at Great Hill Capital, we are looking to benefit from and focus on and invest in the AI beneficiaries versus the AI cost centers, the companies that are going to increase margin as a result of implementation of the technology versus the ones that are absorbing all of the CapEx. And I think to Scott Z's point, is the earnings growth rate of the Mag 7 is actually aggressively decelerating, and the cash flow generation is aggressively decelerating. So you have a situation where you have expanded multiples in this tiny little area of the market with declining earnings growth, and then you have the rest of the market that you could throw a dart at, where the earnings growth is accelerating and is going to be pari passu, the growth rate, with this concentrated level, but the multiple is meaningfully lower, which is a point that Scott Z made. So I think there's really unlimited opportunity. One company, I don't know if you want to go into companies yet, that is holding for us is GXO Logistics. This is a Brad Jacobs company. Does anyone know who Brad Jacobs is? Okay. Brad Jacobs has probably created more wealth for shareholders than any other operator in the business. He did United Rentals, the equipment leasing company. If you'd invested with him when he got involved, you made 200 times your money. So if you put in $1 million, 18 years later, you had $200 million. If you did XPO Logistics with Brad Jacobs and you put in $1 million, you had $50 million in about 10 years. He is still the chairman of GXO Logistics, which was spun out of XPO Logistics. They just put in a new CEO. If you remember from this morning, the new jockey is critical. The new CEO is Patrick Kelleher. He ran DHL US, okay? And for 33 years, he knows what he's doing. 75% of GXO's current revenues are outside the US, so it's a weak dollar play, which is good, but there's a tremendous amount of blue sky in the United States with the free trade zones where people are shipping to get around the tariffs. They can keep them in warehouses until they actually ship to the customers. They're taking advantage of that. They brought on a lot of new clients, Nike, Boeing, Apple, etc., trading at a very low multiple, and the stock got hammered. It was $100 at the COVID peak when everyone was shipping everything, e-commerce, logistics, contract logistics, reverse logistics, et cetera. And then you went into everyone was buying goods during COVID, then you went into the destock cycle. That bottomed out at the end of 2023. They are now re-accelerating in terms of margins, in terms of revenues. Everything is hitting on all cylinders. We have the new CEO, and they just got the approval in the United Kingdom for the Wincanton acquisition, which the CMA was holding up for a while. That's going to add another $60 million of cost synergies. And their return on operating capital has been north of 30% consistently. So this is a $50 stock. We've built a pretty sizable position here. We think this can be a double over the next 3 years at least. And we're pretty sanguine about that. And that's one that you don't have to worry about being at nosebleed levels. If they miss a quarter, the stock's down 50%. You're not going to find that with the GXO Logistics, with that leadership, and with that opportunity with the re-acceleration of the industry and the margin expansion. By the way, they use more robots in their picking in their warehouses than any other company there is. So talk about AI and robotics and agentics and all of that. They are a leader in that, and Brad Jacobs has done that throughout his career, is he rolls up industries and then he implements technologies to double EBITDA, and he's doing the exact same thing at GXO.
Well, Scott Martin, since Tom, we want to make sure you get your 1 or 2, 3, 4 questions in before we have to wrap this thing.
Oh, I'm sorry.
I got one more. Who was here 2 years ago or at MoneyShow a couple years ago? Okay, great. Actually, no, a decent amount. I pitched a stock called Alibaba. It was, quote, uninvestable. It was China. It's now up triple. The options we did are up 7x. I've got a new one for you, and it's going to make you want to get one of those airplane bags, exactly the way you got an airplane bag 2 years ago with Alibaba. It's called PayPal, okay? Stock's down 80% from its COVID highs. It's generating record free cash flow. No one's paying attention. They generate $6 to $7 billion. Oh, and by the way, they're buying back 10% of the company every single year. They have record users, 438 million. They fired all their non-profitable customers. Alex Chris came from Intuit, where he ran the small business unit. This was one of our catalysts this morning, a new jockey. It was a 38 bagger while he was running that division, the Intuit stock, so now he's applying those. They brought over the guy from Amazon who started the whole ad business on Amazon. They're doing that on PayPal. Venmo's now got 100 million users. It's like the Kleenex of peer-to-peer thing. Buy now, pay later is growing at 20%, and you can't give the stock away. $6-7 billion of free cash flow. I mean, it's just a cash machine. It's re-accelerating. Margins are expanding. Revenue's expanding. No one's paying attention. This is exactly what was happening with Baba 2 years ago when everyone said, China's uninvestable. PayPal, that's yesterday's news. I'm telling you, we'll come back in 2 years. This stock is going to be, it's $60 now. It'll probably be $120 to $150. And people will just be starting to pay attention to it. The sell side will just be putting out their buy ratings at 130, saying it's going to 150. And if you were here at the Money Show, you'll have a little bit. Your downside's protected, your upside's meaningful, and that's one we like. This is all opinion, not advice. I'm just sharing what we own.
Pop off the recent back when they did it, and also the fact that they too are starting to show some of this great earnings growth.
By the way, you brought up Braintree, which is a great point. People are like, I haven't used PayPal in 5 years. Did you take an Uber here, by the way? That's powered by Braintree, which is owned by PayPal. Okay. Did you book a trip lately? All the websites are powered by Braintree, which is owned by PayPal. Most people don't know that. So
could be an acquisition too, acquisition target.
Yeah.
Potentially, if they keep trading at such a cheaper level.
Yeah. So, well, I would have something to say to the board. I mean, the worst thing that can ever happen with a turnaround is that the idiot board takes a 20% premium bid when the stock is going to be a triple over the next few years because they're hitting on all cylinders. I don't think Alex Chris would go for that. Actually, GXO had a takeout offer at $60, and I got all over them. If you accept this, I'm never going to. Let's just say I was not going to be accepting because I own it at 50. I didn't get into it for a 20% return. This is going to be a double plus. It's going to be a $100 stock. Why the hell would you even entertain selling it at $60? And sure enough, they rejected the offer. It's going to be a double to a triple over the next few years. Same thing with PayPal. They'd be absolutely out of their minds to accept. By the way, the fifth largest issuer of stablecoins, 3.6 billion. They are hitting on all cylinders. This Alex Chris, the rewards that he's doing on the debit cards, the university branding. Every university now has a Venmo debit card with the branding of their football team. I mean, kids are getting into the habit. People have no idea what Alex Chris has done in the last 12
years. Considerably. I mean, the UI is a lot easier. Just the interfacing and how
yeah.
to use the cards is really good, actually.
Yeah.
So you're passionate about that one.
I want to
look. Every year, my position gets 10% bigger, and I didn't put a new dollar in. I mean, you can't ask for anything more than that.
Scott Martin, I wanted to ask you